thought we'd take a look at, there's probably hasn't been a bigger dog on the share market or a more unloved stock on the market for the last 2 or 3 years than AMP. It has been battered from pillar to post. It reported today, shares on the rise as a result, reporting a full, look at that, up 3%. It's cracked $1 for the first time in a while. Despite reporting a full year net loss hit by non-cash write-down, so they're continuing to write stuff off their balance sheet. Stripping out one-off items though, profit was up over 50%, helped by lower outflows from its flagship fund management arm. No dividends been declared either. Is this finally the turnaround for AMP that all its investors have been waiting for? Or is it a false dawn? Henry Jennings, what do you think? Is the ugly duckling starting to grow a few feathers and turn into a swan?
Koshi, I think you're being unfair to some of the other dogs in the market as well. There has been Newix springs to mind as well. That's been a perennial, well, since it's a big float, it's been a big dog. AMP though is a tricky one. I always compared it to the actual AMP building, which sits on Circular Quay, and for a long time it was under construction, similar to the stock itself, similar to the company. It has now been revealed in all its glory, and if you drive over the Harbour Bridge or you look at the Sydney skyline, you'll see the new AMP bit, which sits behind the old AMP bit. And again, that is a metaphor, I guess, for what's going on at AMP. And Alexis George is in, I guess, a race to some extent to try and push the company towards the back part of the building with the new bit and give away the old bit. The problem that AMP has, apart from the fact that it is a dog and it has a number of multiple problems, and even a 3% rise today, let's face it, is hardly the stuff of turnaround stories. It has been bid for before, but the good stuff is all being demerged, and the good stuff is all kind of interest to other players. So you get this kind of scenario where the carcass is being picked apart by the hyenas, and certainly within AMP Capital is one of the big attractions there. It's going to be called Collimate Capital. There's some fantastic marketing there. But you've got to say, there are just easier stories and easier turnarounds. There's still a lot of moving parts in this business. It's still suffered some serious reputational damage over the last few years. If you've been a shareholder of the AMP, you have suffered like no other company shareholder, I think it's fair to say. I still think it's problematic. I still think that there's still problems with the write-downs, there's problem with the wealth division, the AMP Capital with the likes of Shane Oliver, quality business doing really well. Somebody's going to snap that bit up, but then what are you left with? I mean, that's the trouble. It's possible that someone might come along again and have another crack at it as a sort of a whole sort of exercise, take the whole lot over and divvy up the bits. That is always possible. But I just think, in this market where there's so many opportunities, there's so much volatility, do you really need to buy this one? I'm just not sure. Yeah. I think if you're a long-suffering shareholder, you're probably going to hold because it is showing signs that maybe we're going to get a turnaround. But to be honest, we have seen these signs before, and it has all ended in tears. Yep. So, I think it's a hold at best, but really and truly, it is a carcass being picked over by the vultures or the hyenas, I think, at the moment.
So 542 down to $1.05, that 5-year chart shows you just how miserable it has been. But Henry, a lot of vulture investors would say, first sign of a bit of a turnaround. But what you're saying is, and this is the important thing for investors to understand, it's not going to be turning around the old AMP because a lot of the good bits have had to be sold off to keep it afloat.
Yeah, that's the problem. You're just going to, that is the big difference. You're just going to end up, it's a bit like years ago, there was a thing called Macquarie Infrastructure Group, and there was Good MIG and Bad MIG. Good MIG became Transurban effectively over time, and Bad MIG ended up being called Atlas Arterial. And all the dodgy assets, which were at the time considered dodgy, like the French toll roads, etc., and some of the Dulles Freeway toll road as well, were all stuffed into bad MIG. Now, bad MIG was a rehabilitation exercise and did a fantastic job, and Atlas Arterial is now kind of one of the great infrastructure stocks, I guess. So you can see there is turnaround potential, but you know, at the end of the day, you know, there's so many good stocks out there, so many opportunities, so many stocks that have been beaten down. Do you really need this one? Do you really going to put your hard-earned into this one? You know.
Yep. Good point.
Go play somewhere else.
Because Howard, as you always say, you got 20 or 30 stocks in your portfolio, along Henry's theme, do you really need something as complicated as this?
No, you know, there's so many better things to choose from. I think Henry's put it pretty eloquently. Why would you want to be invested in this? Put the stock market aside for a moment. If I came along to you and I said, I have a private business, it's been doing worse and worse and worse year after year after year. We've undergone half a dozen restructures over the last 15 years. None of them have really worked. The business has just got worse. We've sold off all the best bits. But wouldn't you like to buy a piece of this business? You wouldn't even bother asking me the price. You'd say, what are you wasting my time for? What do I want to buy into something like that for? Now, that's the case with AMP. I mean, really, Henry's pretty much said it all, and why bother? There are far better places to put your money.
Okay.